Hey everybody, it is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, March 17th, 2020. We are again in the final hour of the trading day. I mention this most days, but in my opinion, the most valid prices to make your buying and selling decisions from are the prices that are just as close to the close as possible. And I say this because during the day traders and the algorithms are in control of the pricing. They're moving it around. I consider it mostly noise. At the end of the day, the large financial institutions come in with size, with very smart people, with the most money, the most technology. They come in, they take control away of the price movement from the day traders and the algorithms, and they move it to what, in my opinion, is the most valid price of the day. And so therefore, I like to make the majority of my buying and selling decisions based upon the closing price, or just as close to the closing price as you can get it. Hey, I appreciate everybody coming today. It's always nice to have you here. I always look forward to seeing you. I think we always have such a great group, and it's kind of a fun community. So thank you so much for spending the time coming here. And I hope that the time that you do spend is you're learning something and it's been helpful with your trading and your investing. This year has not been a lot of money making. We've been more focused, really at this point on not losing money or losing less money than the rest of the market. So I hope it's been helpful. So Dan is here. Hey, Dan, nice to see you. Always great to have you here, sir. Mount Doji. Hey, how's it going, my friend? Always glad to have Mount Doji here. Love Mount Doji. Zach is here. Hello, Greg and friends. Hello, Zach. Good to see you. Appreciate, always great to have Zach here. Alton is here. Hello, Alton. Hope you're doing well, my friend. Kamal. Hey, Greg and all. Hey, Kamal. How you doing, sir? Well, we're having another wild one, I guess. Although, if you compare it to the last couple days, it seems fairly mild, which any other time in history, this would be a huge day up, about 500 points on the Dow. We're up 2.63%. NASDAQ up 284, up 4.19%. And the S&P up 91 points, up 3.85%. So the NASDAQ's the clear winner. We were higher earlier. We were up 1,000 points earlier on the Dow, and now we've given it back. But it's strange because compared to some of the other days we've had, this is a pretty small range day, which is unbelievable to even say. But of course, we had a 3,000 point down day yesterday, which is just unbelievable. So anyway, I hope you're all staying safe out there. I hope you are position sizing conservatively, adhering to your stops, getting out when you're supposed to, not chasing things too high. Recently, we've had down day, and then a big rally, but then it immediately dumps on us. And that's kind of been the cycle lately. That's been the trend, right? 2 days down, big day up, immediately big day down. So it's a very treacherous market to play in. And, my best advice is to position size or create that plan, get out when you're supposed to. And probably most important in this market is reduce your position size because the volatility is so high. Usually I take a 10% position size, but the volatility is so freaking high, double, triple, quadruple. So, even taking a half position or even a quarter position of your normal account is the same as taking a regular position when the market's not so volatile. So anyway, I hope that makes sense. Let me know if you have any questions. Bob is here. Nice to see you, Bob. Thank you for coming. Joe Turner, what's up, traders? Hey, Joe. Always great to see Joe and the poems. Steve Burns, hey, buddy. What's going on? Always great to see Steve. Always an honor and a privilege to have Steve Burns in here. He's such a great educator and author. It's just, I just feel lucky every day where Steve's here. And Steve says, these intraday ranges are stressful to watch. Yeah, just to watch, right? Alton, when we're doing that Stipe talk, Alton, send me an email. The email's in the description of this video. Send me an email, and then we'll correspond on what nights and what times I have available and when you're available to schedule that Skype call. But yeah, I would be happy to do that. We just have to schedule it up. Joe says, oh, here we go. Joe has a poem. As I watch this market, there is no tranquility. These stocks are moving with much volatility. Like a tree in a storm, holding on by its roots, I'll hang in here and not lose my boots. 100% correct. Very good. As I watch this market, there is no tranquility. These stocks are moving with much volatility. Like a tree in a storm, holding on by its roots, I'll hang in here and not lose my boots. So good. Thank you, Joe. Always appreciate that. Always in awe by how you and Frank can just bust these poems out here. I mean, that's a skill. Amen, Joe. Joe says, or Steve says, I never thought I would think the Dow was up only 6 points week rally. I know it's a weak rally in the big scheme of things. It's a deep, big rally, a weak rally. I mean, we were down 3,000 points. You know, I could envision us going up 1,500 points halfway from a Fibonacci standpoint, but yeah, I guess it's just a sign of the times where 600 points is a weak rally. 600 points in any other time frame of in the last however many years would be a monster day, and this is yeah, it's okay. Glenn, how you doing, Glenn? Glenn says, hi, Greg. CLX breaks above 5 a.m. yesterday and was a good entry. Did you buy CLX? Oh, yes, it did break above. Fantastic. Fantastic, Glenn. Fantastic. You know, if you're comfortable, let me know where you bought that and we'll get it up on the board. Andrea, hello, Andrea. Good to see you. Always like having Andrea here. What a disaster this is. I hope everyone is staying home. Yeah, I'm staying home, but I normally stay home. So, you know, people are talking about how bored they are and all this. And, you know, to me, it's like another Tuesday. Because generally I'm home alone, hiking up in the mountains. I don't go out much. I do go to the gym. I do kind of miss the gym. But anyway, it's okay. Steve Burns says the EU just closed their borders. Well, that doesn't surprise me. Doesn't surprise me. Hey, Frank, good to see you. Frank says a poem. Topo the charts to all traders and all. Leprechauns prefer gold. I know you've been told. But with your computers and all we've seen, with luck, we'll both end up in the green. Okay, I butchered that. Top of the charts to all traders and all. Leprechauns prefer gold. I know you've been told, but with your computers and all that we see, with luck, we'll both end up in the green. Yes, sir. Thank you for that, Frank. Always appreciate that. Always like to post these posts on Twitter. Joe, I always post your poems as well, but I can't reference you because I don't think you have an account, but I do post them. Oh, but with your computers and all that we've seen, with luck, we'll end up in the green. Okay. Well, let me fix that so it's correct when I post it. There we go. All taken care of. Steve says we have 2 5-star poets in here. Outstanding. I agree. I mean, the other day, Steve, when we spoke, I forgot to mention about Frank and Joe. I mean, what a treat it is to have that. Glenn says Ontario declared a state of emergency this morning. All bars and restaurants are closed for 2 weeks. Yeah, I was kind of, you know, I heard some rumblings about that, and it seems like it's kind of the norm. All right. Well, listen, here's the plan for today. First of all, we're going to run the U.S. legal disclaimer. Secondly, we're going to come back, take a look at my current positions. We're going to talk about when I bought them, why I bought them, how I'm going to manage them moving forward. I don't think we have any trades on the board for anyone else at the moment, unless you want to type them in the chat, and then I'll put them up there. After that, we're going to do a few minutes on trader psychology. There's never been a better time to learn about trader psychology, and I think traders who have never seen a bear market, they'll start relating to some of the, these posts and these little saying trading words of wisdom that I say. I think they're going to resonate with them now. So anyway, it's very important. It's important to learn how to read charts and entries and exits. It's all, it's something you have to learn, and it's a skill. But the bigger skill, the higher skill, is learning how to manage your emotions. Stephen Goldstein, from Alpha Mind 101, he kind of summed it up. He's like, trading is about not taking the trades that you really want to take and taking the trades that you really don't want to take, right? It takes discipline, and it's very important to have discipline in trading. It's the most important. And, like I always say, you can be a great chartist, you can be a great technical analyst, you can put together a great trading plan, but putting one together and following it is a whole different story. It's kind of like going on a diet. We know that we should probably exercise more. We know that we should eat better foods. Like, that's the plan, and the plan will work, but following it, well, that's a whole other thing, right? And it's very similar to trading. So anyway, we're going to spend a few minutes on trader psychology. After that, I have marked off possible entries today that we'll go through. I've already gone through the list. I have 3 requirements when I enter a position. First requirement is I want to be able to find a confluence or combination of indicators lining up in the same time frames, and ideally on multiple time frames. And the reason I say that is because I look at indicators like MACD and RSI and moving average. I look at those as potential groups of buyers. And so, you're going to put yourself in a much better position to have a winning trade. Will improve your odds. Doesn't mean you're going to have one, but it will improve your odds if you're with as many other buyers in the company with as many other buyers as possible. And if I have multiple indicators lining up, I look at that as having multiple groups of buyers coming up. So that's my first requirement. Second requirement is I have to make sure I have a good risk to reward. Sometimes you can have a great confluence of indicators lining up or great confluence of buyers lining up, but it doesn't mean that you have a good risk to reward ratio, right? So not only do you have to have the indicators lining up, you have to have a good risk to reward ratio. So if I'm going to risk $100 based upon some kind of legitimate support below me, I want to be able to make $200 or more based upon legitimate indicators such as RSI or moving averages above me. So that's very important. And then thirdly, I think the most important right now is correlation and account heat. Correlation is if you have Apple and Amazon and Google, you're pretty correlated in the tech industry. I have a rule that I do not like on directional trades. I do not like to buy more than one industry per day, and I don't like to have more than 2 of the same industry total at any time, right? So I can have 2 tech stocks, but I don't want to enter them on the same day. And then what's also important, in addition to having diversity in the type of companies and industries that you own, is account heat. Account heat is very important. Account heat is, if you have $100,000, me personally, I'm not going to put more than 60% of my capital at risk, even if every single stock I have is completely uncorrelated. So those are just my rules. So requirement number 1, look for a confluence or combination of indicators or groups of buyers. Number 2, make sure you have a good risk to reward ratio. 2 to 1 is my minimum. And number 3, be very aware of correlation in your account and account heat, or basically what percentage of your complete account you have at risk, even if you have non-correlated assets. So I have marked off a few and we'll go through there. So we're going to have to see how things close, and I'll have to make a decision on what I'm going to do here, and especially what I'm going to do with position size as well. Then, if I find something that fits all those criteria, I will enter it at the end of the day, or as close as I can to the end of the day. After the market closes, if you have any questions for me about anything, please let me know. I'm happy to help if I can. If you'd like me to take a look at any symbols, I'm happy to do that, give you my humble opinion on those. If you have a symbol that you think would be helpful for the group and you'd like to get my opinion on it before the market closes, make sure you type it in the chat, but please make sure that you put a star by it so I know it's time sensitive. Otherwise, I'll have to get to it after the market closes, okay? So, all right, well, that's that. That is the plan for today. If you could be so kind, just hang tight. I'm going to run the U.S. legal disclaimer, and I will be back shortly. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Marco is here. Nice to see you, Marco. Always glad to have Marco here. Hope you're having a good evening, bud. Gamer, hey, what's going on, Dave? Nice to see you. Kamal says, I bought MA and Microsoft Leaps earlier today, January 22. Ah, interesting. I did something similar today as well, Kamal. Steve says mRNA ZM TDOC charts. All right, let's take a look. mRNA. Well, looks like we have a crossover today. Looks like on the other side of that, we have a bit of a bearish reversal bar, right, Steve? We're opening, we opened higher than yesterday's low, but currently we are lower than today's open. Did I say that right? We are higher than yesterday's close. We are lower than today's open, and we did reject this previous kind of top of this range here, up 7%. ZM. Zoom. Well, oh, we talked about this yesterday with Mount Doji. We did come back into the value zone, which is good. We did start holding support and go sideways, which is good. I didn't like yesterday that we rejected that -1 ATR channel. We do have a bit of a wash out. We have a V1 technically today. Today did wash out yesterday's low, and it looks like it might close above yesterday's close. Over 50 RSI. Not bad. My rules don't allow me to take a position if the day one bar is larger than 1 ATR, which this one definitely is. But I do like the pullback into the value. I do like the sidewards motion, and I do like the trigger, but unfortunately my filters won't let me take up against this big bar. Let's look at the weekly. Weekly is a little high for me up here too at the third ATR channel. And that's the other one. Steve, want to look at TDOC. TDLC. Well, we were above the value zone, hit the third ATR channel and failed, like often happens, came into the value zone, did hold, although I don't see any type of signal here other than a rejection of the 50-day moving average, which is how some people, the rejection of the 50 and the combination of the -1 ATR, some people might, enter based upon that. It does probably give you a pretty good reward to the upside and a smaller type of risk to the downside. Let's look at the weekly. On the weekly, I do like how on the weekly time frame we did come here, bounce right off of the 20-week moving average. So anyway, I hope that helps. But if you're playing off the 50-day moving average, you'd have to get out with a close under the 50. We were much higher earlier, meaning that a lot of selling came in up here. Bing He, hey buddy, what's going on? Hope you're having a good after morning in Singapore. And Zach, I think I said hi to Zach already, right? I think so. If I didn't, hey Zach. um, Fed putting our monetary policy on steroids, yes. Alton says, I didn't know politics were interesting till I started stock trading. Yeah, they have a lot to do with it. Hey, Evan, good to see you, bud. Dan says, Alton, Greg answered your question on the air. Rewind the program. Yep, I said, email me, Alton, and we'll get a Skype call scheduled. Steve says, thanks, Greg. I thought they were interesting charts. They are. They're pullback to value. They're pullback to value setups is what they are. Frank says, I still like Clorox, but I am not in CLX, right? Look at that. It's crazy. That's crazy, huh? Yeah, listen, I'm not saying this can't go higher, but my filters, 90% of prices, 92% of prices fail the third ATR channel. Doesn't mean they always have to, right? But here, it's about where they got before they came back here. So anyway, just my filters, prohibit me from doing that. Okay, so listen, I did take a few positions today that I do want to go over. These are a little bit different positions than I regularly take, although you have seen me take some of those. I've been putting a lot of thought into the best way to trade this market, and I continually come back to selling puts on the best companies in the world with lots and lots of protection. Volatility is high, so the premium that you're receiving on these puts is, something I would be happy with, pretty happy with for an entire year on an annual basis. So let me show you what I did here today. I did write these puts, wrote them out pretty far. Let's start with Apple. I'm going to take you through different time frames to show you how the strike price that I ended up with do have some support even on different time frames. But what I did today is I sold January 2021 puts on Apple down here at $170. Right now it's at $250, which is about almost 33% protection to the downside. Now, I'm fully aware that these could go down lower than my strike price. I'm fully aware that I would be responsible contractually to buy these here, but the premium that I'm getting works out to 8, 9, 10% premium on an annual basis based upon what I'm receiving for selling these puts. And when I sell puts, I don't just sell them at a random price. I have to look on multiple time frames and look for multiple support on different time frames. So even if we go out to the quarterly, well, let's start with the yearly. 170 has support of the third ATR channel. There should be some type of support there. On the quarterly, the 20 quarter moving average lines up with that 170. On the monthly, the 50 month moving average lines up with that $170 strike price. And on the weekly, that 170 lines up with the 200 week moving average. Does it mean it can't go below 170? No, it does not. It absolutely can. But with 33 protection, I think it's a good way for me to not get shaken out of this market, not get whipsawed. And like I say, the premium that it's paying works out to 8, 9, 10% annually. I have some different positions here. And I'm holding it for 9 months. So, if I have to buy Apple at 170, I'm probably okay to do it, and I'll manage it around. But again, it's dangerous. All trading is dangerous, right? There's always a risk of loss. But I really liked how Apple lined up on the on the yearly chart at the 170. I like it how it lined up on the quarterly at 170, on the monthly at 170 at the 50-month moving average, and at the weekly on the 200-week moving average. So I did sell, puts. I sold cash secure puts at $170 expiring in January of 2021, and the annual return on this is right about 9%. And again, it is dangerous 100%, but I don't think I would mind put these shares to me and then managing them from that price plus keeping the premium. And like I said, in my opinion, it's a good way to stay out of a lot of this noise. If the market goes crashing down, I don't have to be as precise, and it's still a good, decent annual return. So I hope that makes sense. Disney. I also sold some puts on Disney. Right down here in the middle of the value zone, Disney's at $92.31. I sold them at $50. So I have about 45.5% protection to the downside, and I'm still getting about 9% premium. On the yearly chart, we line up right in the midpoint of the ATR channels, so there should be some support there. On the quarterly, lines up nicely with the 100 quarter moving average and the negative third ATR channel at the 50. On the monthly, lines up nicely here with the 200 above it and the 250 month moving average. If I have to buy Disney at 50, I probably will. This one right about a 9% annualized return. So, and I also wrote these out to January of 2020. In a normal market without volatility, I might make 2%, right? But because the volatility is so high, that's why I'm making 9%. And I'd be very happy with a 9% return, especially in this market with all the volatility, the ups and downs, the whipsaws. So anyway, I hope that makes sense. Okay, next is gold. I did buy gold yesterday, and there's something wrong with my charts. Yesterday, you can see the price down here, 313.20. Today, it's 313.70. So this chart is missing yesterday's bar. I have no idea why, but yesterday's bar went under the 200-day, over the 200-day, giving me a pretty good risk to reward. If I close under the 200-day, I get out. If I have some nice upside up to the 50-day moving average or the 50 RSI up here. So it gives me a decent risk to reward. I did hit 2 profit targets today. That was novel. Haven't hit profit targets for a long time. So anyway, I'm really glad. I hope after this updates today, I'll get my regular charts back. But my line in the sand on this trade here is the 200-day. So I am glad that I took that trade, and it's worked out pretty nice so far. Qs. Okay, so these are some more puts that I wrote a few days ago. I did sell puts on the Qs. This expires June of this year. On the quarterly, I sold these at 130. Currently, we're at 178.98. So I have about 27% protection to the downside. Normally, you would think that would be a slam dunk, but it is not. I definitely could put those shares down there, but on the quarterly, it lines up pretty nice. On the monthly, the $130 mark does line up nicely with the negative third ATR channel, which I like that. And then on the weekly, oh yeah, I just based this off of the quarterly here with the negative 1 ATR channel, and then mainly on the monthly here at the negative third ATR channel with the 200-day or the 100-day below it. So anyway, I did sell those. These expire not in 21, but June of this year. SPY. I did sell. These are shorter term puts that I sold on SPY. I sold these down here at $200. These expire this Friday. So currently here I have about 20% protection by this Friday. We'll see what happens. It seems like in a normal environment that would be a slam dunk, but it is not a slam dunk. Actually, if you actually look at the delta on here, there's a 5% chance. That's what the delta is saying. There's a 5% chance it will go down there. If it does go down there, I will be required to buy it. But if I do, I'll just have to manage that down there. But again, it's looking pretty good unless we have a huge sell-off. But again, this paid a lot of premium, and I don't have to be as precise. It gives me some good wiggle room, and it does give me 20% protection, and it gave me a really nice premium as well. And then Exxon. Exxon is also puts that I wrote. I wrote these puts down here, expiring in January at $25. Currently it's at $35. So I do have, doesn't look like I have much protection, but these are big bars. I have about 31% protection from where we are now. And if I have to buy it down there at $25, well, then I will buy it at $25 and manage the trade from there. But this paid in a huge amount of premium, close to 18% annualized. But this is much more risky. I did not take huge positions in all these. I just took a regular standard position in these. And that is it. So literally, I only have one directional trade at the moment, and that is gold. Did not take the overnight SPY trade just because yesterday we had a 3,000 point down day. I am going to buy the SPY trade again today, being that we found at least a little support, but I am going to take a quarter position, not even a half position. And the reason why is because of the extreme volatility, and we are under the 200-day moving average. I had not used filters with this before, but you know, this is unprecedented times. I don't want to stop using this because I like this approach, but I do have to adjust for the volatility. So last year was great, positive, beautiful, profitable. This year it's been horrendous, right? But we know from the SPY trade, and just I'll quickly go over it, but you know, this is something that I have done every day except for yesterday. And this is a backtest study from Lizanne Saunders at Bespoke Invest on Twitter. But this backtest since 1993, two options here. Buying option number one was buying the SPY at the open, selling it at the close every day. If you did this every day, you'd have had a negative 13.9% return. However, if you did the opposite, which is what I have done for over a year, buy the SPY at the close, sell it first thing the next morning, positive 634.2%. So if I'm going to allocate money towards something long-term, I'm going to allocate it to something that has a good back-tested approach. You can see this chart, the blue line shows you the buy in the afternoon, sell in the morning, but it clearly does not go up all the time. There are clearly drawdowns, hurtful drawdowns, but overall, looking at it the long term, it does have a positive equity slope. So I am going to institute a couple of filters on this, which I have not, but you know, sometimes you have to adjust with what's going on. So I've been clobbered this year with it. No lie, no lie. But I do believe in this in the long term, and so I am gonna stick with it. But I am gonna reduce my position size now down to a quarter to adjust the for the volatility. Kamal says, "See, so you are not looking at managing the long-term put rights?" Oh, it's hard to say right now, Kamal. Honestly, it's kind of hard for me to say. I'm just going to have to see how fast these things go down, if they go down, where they are closer to expiration. But you know, when I think about buying some really good companies at really deep discounted prices, that's kind of my thinking on these. And you know, if I get put the stock, then you know, depending where it is, depending what's going on in the environment, I may just have to get out. or I may keep them and just manage them as long term. So it's kind of hard to say. I wish I could look into the future and see. Glenn says Cisco hit a target buy trigger for me at 32.50. Webex is having the best demand and direct competition with Zoom. Let's take a look at Cisco. Well, you know, at least Cisco is starting to find a bottom here, right? It's starting to find a bottom. A lot of volatility, but it is starting to consolidate and build a little bit of a base, which I think is really what we need to see in the market as general. Just huge ups and downs and new lows and all this kind of stuff. This sideways movement here, this is something Linda Raschke would be looking at. She likes to see kind of these ranges start to move sideways. And we are above the negative third ATR channel. Jackson, hey buddy, what is going on? Good to see you, my friend. How are things in Australia? Anything going on with lockdowns or anything there? Jackson's our reporter in Australia. Steve says, with cash secured put options, you are being paid nicely for a low probability to buy stocks at the price you want. This is a great time to start that system with VIX at these levels. You know, I agree, Steve. I've been thinking about all of this deeply over these because you know the market has changed, and I have really started thinking deeply about the risks and rewards of all these. You know, with the premiums that you're being paid now, these are premiums that many people would be very happy with to have for an annualized return. And you know, you may be able to buy, you know, buying Disney at 50. You know, there's low and there's too low. I completely understand that. But you're also right with VIX at these levels. I mean, these are historic VIX. But again, it is no guarantee, right? People think, oh, I got 20% protection. It never go down there. I don't think like that, right? I'm thinking, okay, it's probably going to go down there. Do I really want to buy it down there? And that's why I spent so much time identifying those strike prices. Bob, Greg, Bob, hey Bob, Greg, what was your SPY performance in 2019 as a percentage? I think it was about, I'm just guessing off the top of my head, I think it was about somewhere between 12 and 14%. But this year, it's down that much as well. So anyway, I hope that helps. Somewhere between 12 and 14% in 2019. Jackson says, SPY trade is back-tested and profitable over time, but yes, good time to apply filters. Yes, Jackson's becoming quite an expert on that. Kamal says, I called bottom yesterday, at least for a couple of weeks, especially since Greg did not buy SPY yesterday and Trump changing tone. That was Kamal's buy signal for me not buying the SPY. Probably a pretty good signal. I think Glenn mentioned that yesterday. That was an indicator when people start taking their stop taking their trades. I think both you and Glenn are spot on. Honestly, I do. I mean, if I was outside of this picture and I heard about people stopping taking their trades, I would probably immediately think, we're probably at a bottom. We're probably at a bottom. Yeah, you guys got me on that one. But listen, with the 3,000 down point day and getting clobbered on that trade, I just did not want to expose myself to another huge overnight gap. I wanted to find some stability before I stepped in. And, you know, I had Qs, I had SPY, I had other exposure as well. And, you know, I always preach to you not having too much exposure, not too much account heat. But yeah, you're right, Kamal. You're right, Glenn. That could have been the all-time buy signal when Greg skipped out on one day of SPY. 100%. Listen, if I was out and about and people were talking to me about how they're selling everything in their mutual funds, my first thought would be, oh, it's time to buy, right? You guys know how that is. Oh man, I am way behind on time, aren't I? Okay, so listen, before we get to my watch list, and like I say, I have identified a few that have some potentials today. for a possible entry at the end of the day, and I'll explain why. Before we get to that, I do like to talk about trader psychology. It's so important, especially in this kind of market. Sticking to your plan. You don't have to have the best plan in the world. Honestly, I think they're overrated. I think you just have to have a decent, sufficient plan. But more importantly, you have to follow that plan, right? When I talk to people about buying stocks or they asking investment advice, I say, okay, that sounds good, but what's the plan, right? Everyone's like, hey, I'm going to buy this low. Well, it's not really a plan, right? Sure, it's okay to buy a great company low, but you have to have a plan, at least some kind of plan when you actually take that trade, as far as, where am I going to say I'm wrong and get out and so forth, right? So anyway, sticking with your plan is so important. The psychology behind it, the discipline is so important. So that's why I like to look through Facebook. I like to look through Twitter. There's some really great channels out there like Trading Composure. They spend a lot of time and energy putting out great words of wisdom, trading words of wisdom for us. So if you haven't followed Trading Composure, one of the best ones out there at Trading Composure on Twitter. But let's see what Trading Composure has to say. You are disappointed by a loss because reality did not conform to your expectations. To be less disappointed, expect less from the market and demand more from yourself. More discipline, patience, perseverance, wisdom, and impartiality. I mean, it's totally true, but it's easy to read this stuff when the market's closed and go, yeah, I need more of that. But we all know, right? We're human. It's hard to be disciplined sometimes, and it's hard to have patience and perseverance and wisdom and partiality. But, every day I talk about these kind of things, and regardless of whether it's Trading Composure or Steve Burns or Stephen Goldstein or Thomas Paine, they all write about the same things because they all know how important it is. So you are disappointed by a loss because reality did not conform to your expectation. That's a pretty good explanation of disappointment in general. You are disappointed by a loss because reality didn't conform to your expectations. To be less disappointed, expect less from the market and demand more from yourself. More discipline, patience, perseverance, wisdom, and impartiality. So thank you so much, Trading Composure. And I hope that this is helpful, and that you'll be able to take this in and internalize this. But yes, Kamal did call a bottom. At least he did with me last night on Skype, at least for a couple weeks. That's good. Steve says, even Renaissance Technologies had to turn off trades in their best systems in times due to 2018. Yeah. Look, Steve was taking the overnight SPY trade, but he was smart enough to stop trading that a while ago. Right? I should have followed his lead. But yeah, Renaissance Technologies, one of the biggest hedge funds and algo trading companies in the world, turned those off. Australia, Jackson says, Australia is very close to lockdown. Fear factor is high in communities. I am in good health, and again, I strongly urge people to think slowly and calmly as possible. Eat real food, no process. I agree. Jackson says, remember what your mama and grandma used to cook. It's about keeping your immune system strong, personal level. I'm fine. I'm glad to hear that. Hey, Frederick, our friend from France, he sent me an email today. He is quarantined, so I don't know if he's watching today or not, or if you watch later, Frederick, I hope you're doing well. Greg Perkins, hey Greg, what's going on, buddy? Hey Greg, day 2 of being here. I need a glossary of acronyms, but I'm enjoying the content. Oh, very good, Greg. Well, you have my number. Listen, call me. We have a mutual friend, Alan. So if there's anything I can help you with, bud, call me, and thank you for being here. Buying time for sure, but it can still go down 100%. Microsoft testing 200 SMA. Yep, we're going to look at that in a sec. Steve Burns, yes, regarding Renaissance, though through some times even algo traders like myself adjust just by default. If you look at risk, you can preserve capital, end up making big. Yep, 100%. Okay. Let me take a little look-see here. I am having a great day. I have to say that. I sold those Apple puts near the low, so those puts are in the money already. Disney's puts are in the money. Gold having a nice day. 2 profit targets. Man, haven't seen those for a while. Of course, my Q puts are doing well because it's up. SPY puts doing well, and Exxon is up nicely today. All right, let's take a look at a few trades here. potential trades that I've marked. Okay, so Apple. Oh boy, this is a tough one. We did go under the 200, over the 200, under the negative third ATR channel, over the, I'm sorry, yes, that's right. Under the negative third, over the negative third, under the 200, over the 200. Did take out this previous little low here, so it is technically a false breakout to the downside. We have an RSI divergence, meaning we have a low. Now we're lower. Even though we're lower, the RSI is higher. It did get stuck right here at the low of this previous low intraday, and that's actually right where I thought it was going to get stuck. If we look over at the weekly, we have a pretty nice confluence here with the 50-week moving average and the negative third ATR channel. It's a 4150 RSI, which gives me a little bit of pause because, you know, if I'm looking up here at the 50 RSI as my first stop, then it gives me about a 1-to-1. Well, let's take a look and see what it would be. Oh, 50's up there. You know what? I didn't run that earlier. Well, I guess it does make sense. So I'll tell you what I'm going to do. I do like this trade. I am only going to take a half a position because of the volatility. So, you know, yesterday, by the way, well, I'll get to that. I'll get to that after when we have more times. But yeah, 50 RSI. I was eyeballing this and I was off. So yeah, it does look like I am going to take Apple. But again, because of the volatility, I'm going to just take a half of position. And I will get out if we close under the 200-day. That's all there is to it. And I wouldn't be surprised if we do close under the 200-day. But one of, you know, again, I've said earlier, you need to take your trades when you don't want to take your trades. I don't want to take the trade. I'm scared, right? I'm scared. It's been brutal. But also I know I should take it if I have a valid signal. And any other time I would take this trade. It makes sense from a risk to reward standpoint. But to mitigate a little bit, I will take a half of position. Amazon, well, earlier, you know, when I saw this, it was up over the 200-day. I guess I looked right at the high. I'm not going to do anything with Amazon here. I would have to have this at least close above the 200-day moving average. Dow Jones, well, look, we have an under 30, over 30, and it's kind of a subpar V1. I would much rather go with Apple at this point. The relative strength is better. It's above the 200-day, where the Dow is way, way down here. So I still like Apple better. Disney, of course, I sold the puts on Disney. The gold trade's doing fine. Happy with that. So I'm just sticking in this until either we reject that 50-day moving 50 RSI up here or 50-day moving average, whichever one comes first. Looks like the 50-day moving average. You know, once it moves more than one ATR away from my entry, I'll start to trail it, but I don't think it has done that yet. No, not quite. Well, I'll have to look back over there. Google, look, Google looks like it went under 30, over 30, or did it? Let's take a look. Looks like it bounced right at the 30. With the V1, still have the negative third ATR channel, so I still like Apple better. Microsoft, yeah, under the 250, over the 250. Let me take a quick look, by the way. Oh, I forgot to mention this in the psychology section. You know, we were talking about being disappointed because the market didn't go our way and having more discipline and you know, all the different things I just talked about. Trading in the Zone, if you have not read this by Mark Douglas, it's not going to tell you exactly how to trade. I think it does a little bit, but the main thing about this book is the mental standpoint, getting into the right mental space to trade and not having expectations and just being okay. It's one of the best books I've ever read on this, and it's free. The book's free, Trading in the Zone, Mark Douglas. It's on YouTube. I'm going to go ahead and post this link in the chat because it really would be a great investment of your time to listen to that. I know a lot of you have, but in case we do have some other viewers out there, one of the best possible things that you could ever do is read that book from a psychology standpoint. Let me go to ETF replay. And let me pop in Microsoft over here. And that's the 250, right? Kamal, 250. Simple moving average. All right, here we go. It did close under the 250, over the 250. Not so hot on Microsoft, the under 250, over 250. Only returned 127.9%. So yeah, that doesn't, if we put in the 200 day, let's see what happens there. Not so hot on Microsoft. So with that being said, I am going to skip that trade, although I would not have taken that trade at the same time I'm taking Apple, right? Positives and minuses, yes, it was under the 250, over 250. Negative is that we rejected the 200-day moving average. Twitter looks like it went under 30, over 30 with the V1, but still, I'd much rather take Apple because it's stronger. It's still above the third ATR channel. Let's look at VIX. VIX is up today. That's interesting. VIX is up today with the Dow being up 700 points. Interesting, huh? This is only up 400% or something. It's insane. Had this nice base. See this base over here? Boy, I wish I'd have listened to myself because the market kept going up and up and up and the VIX didn't go down and down and down. Remember I talked about that? But it's one thing to talk about it and it's another thing to have the conviction to do it, right? So that's something I need to remember. So, only thing I really see here for me today is Apple, and it is selling, it is getting closer to the 200, which, in this case, I'm kind of glad because that gives me a better risk to reward ratio. So other than the puts, that's what's happening. If Apple closes over the 200, I will take it. And I am buying the overnight SPY position, the quarter of a position. So that's the plan for today. Ryan D. Hey, Ryan. Ryan says, Google looks promising. Bounced off the 200 SMA on the weekly. Oh, good call, Ryan. I forgot to look. Yes, that's. Thank you for reminding me of that, Ryan, that, looking on the daily, okay, under 30, over 30, or bounced at the 30 plus a V1. Always important to look also at the higher time frame, in this case, the weekly, to get double confirmation, like I do with when I'm selling puts. But yes, very, very good point. Same with Apple. We bounced off the 50-week moving average. But the reason I'm going to pick Apple over Google is because it's over the 200-day. It's above the negative third ATR channel, where Google is still underneath the 200 and underneath the third. So I hope that makes sense. Jackson says, Steve Burns, yeah, know what you mean. I've actually taken a few trades and kept on top of my equity, but waiting for things to line up and cutting those losses instantly quick so they will remain small. Perfect. Frank says, right now we're trading in the twilight zone. Yes, sir. I completely agree. Maybe one day they'll make movies about this time with trading, huh? Jackson says, Steve and Greg, is this comparable to any time you've traded in history? Obviously unique, but can you compare it to a period? I've lost count of how many times I've read Trading in the Zone. I've never seen anything like it. I've been through all the market crashes. Percentage-wise, we've gone down more, but the rate of change, how fast we've gone down, is epic. And the faster you go down, the more emotions that are just amplified. The slower you go down, less emotion. So not me I have never seen anything like this. Maybe Steve has. Adobe. Yeah, Adobe looks pretty good with the close below, close back above the 200. It looks similar to Apple, actually. Let's look at the weekly. Yeah, rejected the 50-week moving average. Yeah, perfect. I mean, both of these look very, very similar. Adobe has a little bit better risk to reward. I'm going to have to make my decision here quickly. Adobe is up more today. Well, you know what? What are we at? 44. RSI, Apple has 40.71. I think I'm just going to stick with Apple, but Adobe looks good as well. Kamal, 100%. As a matter of fact, I think it even looks a little bit better, but because we've taken out this low here, so it is more of a false breakout. Apple, well, we have to go back from there. I think they're similar, but of course, you know, they're both going to probably most likely move the same way. Okay, let me do a quick check. All right, gold is fine. Everything else is fine. That's the nice thing about these puts. You don't really have to be too interactive with them. Okay. So I'm just going to go ahead and buy my half a position of Apple right now. Okay. $254.32. $254.32. Okay. What are we up? We're up 940 points. Well, that's turned out to be a really bad entry. I should have waited a couple minutes. Oh my gosh, is this going to close below the 200-day? That would be something, right? In 2 minutes, I'd get stopped out of your trade. Unbelievable. Steve said the virus is the terrorist. The oil sector was like the financials back in 2008, and the circuit breakers stopped new Black Mondays. Yeah, Frank says, I didn't like the run on the money markets. Fed has to step in to boost commercial paper. Yeah, that stuff's always concerning. Steve says, also, none of the past events shut down the world economy. That is true. I mean, like literally shut them down. Jackson says, I've never sat on any circuit breakers before. In the past week or so, I've sat on 3 or so. Strange times. 100%. Very, very, very true. So, all right, are we done yet? Where are we at? Okay. So Apple at 254.32 and SPY, overnight SPY trade quarter position at 252.80. So Liz Ann Saunders is going to have to just forgive me for yesterday's indiscretion, but it was pretty gnarly. Okay. So there we go. Oh, by the way, wanted to show you fills today. So I sold two profit targets of gold, 143.20, 144.76. Sold the Disney 115.21 $50 puts, got $375 a contract for that, and then sold the Apple 115.21 170 puts, got $1,380 per contract on that. Bought Apple here today at 254.32, and then my overnight SPY trade bought this at 252.80. Oh, I wanted to mention something. So yesterday at the end of the day, I took that SPY trade, was a losing trade, and my friend who listens to the Dr. Jorgensen said, "Hey, you know, Greg, I think you said something and it didn't come out right yesterday." I said, "Oh, what was that?" And he said, "You took that trade on the end of the day on SPY." And I was like, "Yeah, the one that lost." And he said, "Yes." And he says, "I know what you were saying, but what it sounded like to me on the podcast was that you said, well, I took it just to take it because I wanted to trade." That is not what I meant. So let me just clarify that. The reason that I took that yesterday was because, circling back to what I say, I didn't want to take the trade, but if you have a valid signal, even if you don't want to take it, you should take it, everything else considered. And that's what I meant. I took it because it was a valid V1, V2, whatever it was. I can't remember now, but it came across as I was taking it just to trade. That is not me. I took it because I was supposed to take it because it was a good signal that didn't work out. So anyway, you'll never hear me say just trade to trade. Promise you that. What I meant is I took the trade even though I didn't want to take the trade because I'm supposed to do that. So anyway, if any of you got that impression from me yesterday, I hope that clears that up. Well, good day today. At least all the options did well today. I was fortunate enough to sell those puts on Apple and Disney near the low of the day, so those are up nicely as well. So that's that. So just a quick recap. I did buy Apple here with the close over the 200. Under the 200 when it closed over, under the negative third channel when it closed over. Risk to reward is up here, 50 RSI, 286. Close below the 200 is my risk. Doesn't mean it's going to go up there. Doesn't mean it's going to go down. But if, at least if I get out, hopefully I'll have a smaller loss than if I'm correct and it goes up and have a bigger win. Disney sold the puts on Disney down to $50. So like I said, about 46% protection on that. We'll see. Gold is the regular. Again, this chart, it skipped yesterday's bar. I actually looked at yesterday's video and the bar was there. I'm sure you guys saw it, but anyway, I did buy it here at 141.94. Luckily, pretty decent. It's 143.85. So that's been a good little trade. It's up. It's not up 50 cents. It's up a few dollars today, but it's missing the bar. But two profit targets there. So I'm definitely grateful for that. Close below the 200. My targets up here, the 50 and the 50. The Qs, I have the Q puts down to 130 as of June. So we'll see if those hold. SPYs, I do have 20% protection for Friday. So that one's looking pretty good, but you never want to count your chickens or start getting cocky about this stuff, right? And then Exxon did sell the puts down to $25. So we'll see. They could definitely get down there. They have a delta of about 20, which means there's about a 20% chance they'll get down there. Oh, and then the overnight SPY trade, got that here at 252.80 with a quarter position. It's, when it's really scary to trade, I mean, listen, I don't blame anybody for not trading. But for me, I think it's important to keep on trading so that you don't get scared out, but you can become less scared by position sizing, really reducing your position sizing, a half, a quarter, even 10%. Let's take a look here. Okay. Just looking at a headline, down rebounds by more than 1,000 points as Trump seeks $1 trillion in stimulus. Wow, that's a lot. Jackson says, how you doing, Kamal? Coming out of this without too many bruises, mate? Bing He, what is the relationship between bond and gold? Seems like bond's going down, but gold rallying today. You know, sometimes they go together, Bing He. Sometimes they get decoupled and go against. You really kind of have to be able to understand economics, I think, at a real deep level, which, you know, it's hard to know why sometimes they go up, sometimes they go down. My guess would be bonds are going down because of all this stimulus. It's weakening the dollar, and bonds are really a reflection of the dollar. That's my opinion, but who knows, right? Joe Turner's an Apple at 253.96. All right. Oh, shoot. Well, I'm just going to put Joe up here because otherwise I'll have different prices all over the place. All right, Joe's in. Kamal says, it's all right. My emotions are in check. Taking stop losses, the volatility on Adobe was a bit much. Yeah, man, if there was ever a time to cut him like a boss, it's now, and I hope things continue well for you. We forget sometimes about the human factor, isolation and trading, and this is a great channel for us to reach out to each other and see how it's going. Yes, I agree. Thank you for that, Jackson. And thanks to Greg for allowing his channel to exist with so much transparency. Well, thank you, bud. Thank you for that. Dan says, Greg, yesterday's gold bar is still as we saw it on Thinkorswim. Yesterday's gold bar is still as we saw it on Thinkorswim. So you're not seeing today's. Oh, yeah, something's screwy. But you can see 2 days ago on the it was the 13th. Now here on the 17th. So I'm missing a day. I'm missing a day. Okay, so listen, everybody. Just real quick, if you have any other questions or comments, please just go ahead, type them in the channel. I'm happy to get to them. If you have any questions or thoughts or jokes or whatever, but I do want to just quickly put in my plug, let everybody know that I do teach private one-on-one coaching and mentoring lessons in the evening time via Skype. I have a course. It's 5 sessions. Each session is between 2 and 3 hours. It's really intensive. I teach you everything I've learned over the last 24 years as a full-time trader. I teach you everything I've learned from my coaches like Stephen Burns, our friend Stephen Burns, and Dr. Alexander Elder, Kerry Lavorne, Larry Williams, all the things I've developed. But I've been through a lot of markets, seen a lot of things, and I think this course, I think you'll enjoy it. It's $1,000. I know it's definitely an investment, but to me, it really is an investment that will pay off for you. In up markets, hopefully you'll make good money. In down markets, hopefully you'll lose less money than most people, and that's the key. So if you're interested, reach out to me. Again, Alton, my email is in the description of the video, this video here on YouTube, and you can send me an email and we'll set up a Skype call. But with all prospective students, I like to set up a Skype call, learn more about that student, what their goals are, what their challenges have been, and then they can interview me. I just want to see if we're a good fit for teacher and student. And, if we decide we are, then we'll set up the lessons, right? That's all there is to it. So if you're interested, my email's in the description of this video, or you can send me a message on Twitter. Either way's fine, and we can set up the Skype call. And again, it's free. There's no obligation. There's no pressure for me. I promise you that. But anyway, I think you'll like the course. I actually do think it's worth it's worth every penny of what you get out of it. So anyway, there's that. And then if you like today's podcast, I would really appreciate it if you could just take a half a second and hit that thumbs up button. It does help build the channel. I don't think there's ever been a time out there where it's probably more important for new traders to go to some kind of channel. It doesn't have to be mine, but someone that at least teaches good trading principles. And hopefully I do that here. So you could help a lot, probably help a lot of other people too, by helping promote the channel just by hitting the thumbs up button. So if you could do that before we get out of here, or you get out of here, I would really appreciate it. So okay, there's my plugs. Hope that's okay. Zach says, Alton, mate, they've commented a few times to you. It is listed below in the description. Frank, you have to wait for the fear line to cross the common sense line. Ooh, right now stocks feel like chickens to hungry wolves. Let me read that again and take that in, Frank. You have to wait for the fear line to cross the common sense line. Right now, stocks feel like chickens to hungry wolves. Oh, very good. Thank you, Frank. Frank's such a good writer. Jackson says, I haven't seen Murray here for a while. Haven't been here myself, but I've got a mate commenting on it in a long-term play, and I'm no expert. What do you think, Greg? I haven't seen Murray here for a while. But oil, I've got a mate commenting on it as a long-term play, and I'm no expert. What do you think? Well, listen, from an economy standpoint or economic standpoint, the reduction in the price of the oil from Saudi Arabia, that's what dropped the bomb on everything, right? That's what really has driven down the oil companies. There's oil companies owe so much money in debt to banks that if oil is at $40 or $50, $60, they can service that debt, right? But with oil being so cheap, it's below what it costs to get it out of the ground. And so from the oil services sector, there are going to be a lot of companies, unfortunately, going out of business. They won't be able to pay their debt service on these loans because the price of oil is so cheap. That is why you're seeing such destruction in the financials, especially the banks, because they've loaned so much money out to the banks, or the banks have loaned so much money. The banks are ultimately going to get hurt here, and that's why the financial sector is taking a hit. Now, as far as oil itself, it's supply and demand. When you have a lot of people producing, a lot of companies out there producing oil, then there's more oil that comes to the market, and it's just supply and demand. So the more oil you have, eventually the lower price it's going to be because there's more people creating it. On the flip side, this is going to put a lot of oil companies out of business, which will take supply out of the market. There'll be fewer people creating oil, and ultimately what's going to happen, not right this second, but ultimately fewer people producing a commodity. There'll be less of it produced, there'll be less of it, and then the price will go up. Does that make sense, Jackson? And I don't know about Erd. I hope he's okay. I know he'd like to short. I know, we know, right? He likes to short oil, so maybe he did really well and he's on a yacht, or maybe he went long. I hope that's not the case, but I'd like to see Murray back as well. Joe said, "Yep, you're missing 316 bar on gold. I've got it on TOS." Yeah, I'm missing it. Today's bar is 317. Yesterday's bar is 313. I looked at this yesterday and went, "Wait a minute, why did I buy gold?" But then I looked back in our video when the chart was right. And I'm like, oh yeah, okay, that makes sense. But I have no idea where this bar went. I know where my stop is, at least, right? Is the 200. So we'll see what happens. Thanks, Joe. Being He, and Dan gives a thumbs up. Being He says, Greg, did you take Apple for under 30, for under over 200 and 250 SMA and over under negative third? How do you count the number of confluent signals? How many confluents considered before taking a trade? Yeah, that's a good point, Being He. I had this discussion with one of my students, Harsh. Well, let's start with the signals. Under the 200, over the 200, under the negative third ATR channel, over the negative third ATR channel on the daily. On the weekly, we've bounced off the negative third ATR channel and the 50. So, you know, it depends the time, but I like those confluence. You know, some of my favorite indicators lining up are under 30, over 30, under the third, over the third, under 200, over the 200. We didn't quite get to 30 RSI, but we see back here where we had the low, then we went lower, but the RSI is higher. So honestly, the way that I view this, Bing He, is when I'm going through at the end of the day, maybe I have 3 or 4 that have signals, but I'm going to take the one that has the most signal, almost like a scorecard. Okay, Apple has 4 signals. Adobe has 3 signals. I take the one that has the most signals. Getting back to why, you know, how I view confluence of signals. So the more signals, the better. And that's kind of how I filter them down. How many confluence to consider before taking a trade? Ideally 2, really. But, you know, this had more than 2. This has the RSI divergence. It has the under 200, over 200. It has a negative third. But, you know, you saw me skip the Dow. The Dow had an under 30, over 30, and a subpar V1. But there's a lot that, you know, in Google, I didn't take Google because really all this had, unless this closed below a 30 RSI or was under a 30 RSI, I think it bounced. Yeah. So really, I kind of only look at this as one signal, just a V1, and not even a great one at that. So as a general rule, Bing He, I think two or more. Kamal says currently no oil is being used cars and planes. Yes, of course. Of course. Yeah. So there's even more supply. That's why we're going down. I'm just saying big picture, if things get back to normal, if they get back to normal, there will be a lot of oil companies out of business and there'll be fewer people supplying it and so forth and so on. And maybe OPEC and everybody will get together and do some oil cuts. Who knows? But as far as buying oil, yeah, that's kind of was my play on Exxon. Joe says, oil hasn't been this low since February of 2016. Yep. I don't really touch oil, but just curious on behalf of my mate. I only have a small pool of stocks, but I know their dance, of course, their dance is like intoxicated drunk on a dance floor of late. Yeah. Yep. So I have Skype call tonight with Miko25, so I'm looking forward to that. I don't know if I've seen him in here, but I am looking forward to that. I always like to meet, you know, people from the group, and so that'll be good. And it's a beautiful day. I'm going to go outside. I've never seen so many families out hiking. So this coronavirus has definitely, I guess, gotten people are not going to the movies or going the sports or whatever, so they're up here in the hills with me. So ironically, I've never seen it more crowded, although I do kind of stay away from them. Okay. Well, we'll see what happens with that, with the Apple trade. I have no idea. Looks like things are down after hours already. That's how it goes. But anyway, I'm glad I took the half position anyway. So we shall see. We shall see. Okay, if there's anything else I can help anybody with, please let me know. Uber stock dropped 6.8 cents, 6.8% after it cancels carpools. Ooh. You know, the one that just blows me away is Boeing. Look at Boeing, everybody. I mean, this was a $400 stock. Now we're at $124. I mean, you know, who knows what's going to happen with this company? They're going to go bankrupt? Are they going to restructure? My goodness. This got right up to the 200-day and failed. I mean, look at this failure. This is unbelievably epic. They've had a lot of problems. Zach says, Greg, would you ever do a video on options? Yeah, that might be a good idea. You know, I'm not an option expert, Zach, as far as all sorts of different approaches. You know, there's so many bull spreads and bear spreads and credit spreads and debit spreads and iron condors and iron flies, right? I mean, you can get so into the weed with options. It's unbelievable. But yeah, I might consider doing just a video on selling cash secured puts, you know, in conjunction with technical analysis. That's a good idea, Zach. I definitely will consider that for sure. Andrew says, yeah, on Saturday went riding on my horse out on the trails and I felt like the mall got transferred to the forest. Oh, so you're seeing the same thing, Andrea, huh? Zach says, seems like you've been doing more of those of late. I know for myself, I have zero clue how to do anything with options. Well, they're not that hard, honestly. I know it sounds hard, all the terminology, Zach. But yeah, I have been doing more options. And the reason why I want to give myself a wide berth and give myself the possibility of buying some of the world's greatest companies at like really ridiculous prices if they get there. And if they don't get there, being able to still make a decent annualized return. And it's less stressful, you know, it's less stressful with options, but you still can lose money. And it is dangerous to sell cash secured puts, just like any other option, because it's not a limited risk situation. When you're selling premium, when you're selling puts, you know, the stock can go to zero and you can get hammered. So you have to keep that in mind. Position sizing and having it dovetail, conservative position sizing and having it dovetail with technicals on multiple time frames is how I like to do it. But thank you, Zach. Thank you for that idea. That sounds pretty good. Jackson says, also, Greg, any day trades or you stopped doing them also? No, I haven't stopped doing them. I just didn't have any today. I didn't have any today, Jackson. Dan says, agree. Options seem very tricky. They're really not. You know, it has all this terminology like delta and gamma and theta and buy puts, sell calls, buy calls. You know, I know it sounds difficult, but really once you get your head around it, not that bad. Frank says, don't be stressed. There's plenty of great trades coming when this nightmare passes. Thank you, Frank. That sounds good. Joe says, BA may be a good buy if the government provides the assistance that they're requesting. It seems like it, right? It seems like it, but the market has not agreed lately. But I can't imagine that at some point. But listen, I've been through this, everyone, with Enron and WorldCom. I had the same thoughts about those companies. I mean, I think Boeing's a little different, but look at all the problems they had with the 737 Maxes. Now they're having, you know, they're having issues with that. They're having issues with airlines canceling. They have a lot of debt. See, that's the problem when, you know, this country is so levered up on debt because they had cheap debt. Now there's all this debt, and now the demand has decreased. Greg, have you recorded your trades in 2008 crash? Did you continue taking trades then? How was the performance then? I tend to believe technical analysis didn't work when fear is so high. Yeah, I don't think it works as high. I don't think it works as well either when fear is so high. I can't remember. I didn't do too bad in 2008. I didn't trade much in 2008. I can't remember though. That was 12 years ago. If I recall, I'll tell you one thing I do remember. I was trading futures back then, and I was 1 day away from the low. I remember that. No, it was 2009. I was one, it was like March of 2009 or something like that. I was like 1 day away from the low. If I would have kept those, holy smokes. But yeah, I was trading futures back then, so it was a little bit different. But I agree with you. You know, when fear takes over the markets, those technical levels generally don't hold like they normally would, and that's why on these options, that's why I've sold them so far down to try to get outside of the noise of the fear. Frank says it's more important to sleep well right now to protect your immune system. I 100% agree. 100% agree. Last week was very stressful for me, you know, with trading and the podcast, and I was feeling under the weather. I do feel better today. I did have a good night's sleep. Kamal says options easy to learn, pain to execute. Amen. Yes, it is easier to learn. Then you've got all sorts of bid-ask issues going on and liquidity issues going on. Ugh. But I think there is a place for options as well, though. Jackson says, I would say part of the analysis of technical analysis would be identifying these drops, i.e., a part of my rules actually prevent me from trading. So for me, that's all part of my analysis parse. Yeah, there's a lot of different ways to trade, everyone. A lot of different ways to think about. There's no right way, has to fit your personality. But the one thing you must do, above all else, you know, some people say, hey, I'm going to go for a 6-to-1 risk to reward. Great. Just make sure you focus on that one on the risk. I don't care what people do to the upside. Some people get out quicker. Some people just risk a lot of open profits for a long term. Totally fine. I don't care if people don't even use a 70 RSI filter. Don't care. You know, it's not how I trade, but don't care. The main thing is that be patient as you want with your profits, but you have to get out quick when you're wrong. That there is no other way around that. So, all right. So 2 things. Try to go out, do something nice for somebody today, but not too close. You can wave from afar, right? You can give somebody a call, see how they're doing. Like I have a neighbor, she lives alone, no one ever talks to her. I called her the other day. I just like, hey, you doing okay? You know, you got food and supplies and this and that. And yeah, I just wanted her to know that, you know, somebody was around or somebody was available if, you know, I don't know what kind of stress level she had or whether she was worrying. So, you know, call somebody that maybe might be kind of alone or maybe doesn't have a lot of support. Even a call from you, she really appreciated it, right? So, you know, let's do something nice for somebody each day, but maybe not in too much of a close contact at the moment. So just reach out to somebody that you think might be alone. It really might make their day. And then second, again, you know, if you don't mind, on the way out of here, if you could hit the thumbs up button. If you enjoy the program, it really does help the channel. So I'd appreciate you doing that. Frank Jackson says, I'm a risk junkie, obsessed. I love it. That should be your new handle, risk junkie. Zach says, thanks, Greg. Thanks, Zach. He says, Jackson, you able to share what rule you use to prevent you from trading? Yeah, that'd be good. Let's hear it. Kamal, thank you, Greg. You're welcome, sir. Oh, Kamal, did I get you down on any trades? I know way up in the chat we had mentioned, but if you do have some trades you want to get on the board, would you let me know? Oh, happy St. Patrick's Day to you, Frank. And give a bag of carrots to an elderly person in a supermarket. Yes, hopefully they're not at the supermarket. Andrew says, you are a good man, Greg. We need more like you. Well, thank you. We need more people like you too, Andrea. Oh, okay. That's right. Well, maybe later, Kamal, you can fill me in on the specifics. Oh, there they are right there. Yes, Jackson, very good. If we were more focused on risk and less profit, we would be more profitable. Isn't that this? Isn't that true? Isn't that true? You know, I have people ask me, "Hey, why are people buying bonds? You know, like 0.75%? They can't make anything." I'm like, "Well, they're only making 0.75%, but they lost out on 20% on a 20 or 30% on the way down. So essentially that investment saved them 20, made them 20 or 30%. Okay. Well, thanks everybody. Have a good rest of your day. Try to do something nice. Give somebody a call that might be alone. Let them know somebody's out there. And I will see you tomorrow, and we'll see what these crazy markets bring us. All right? Okay. Take care now. Bye-bye.